Hello everyone and welcome to this morning's Forex session. I just wanted to make sure David had started the recording, which he tells me he has. So that's brilliant. There's actually really a lot going on. It's quite unusual actually. There's currencies falling out of bed, rising strongly. So goodness, it's all a bit overwhelming really. But before we start as usual, may I draw your attention to the disclaimer that is on your screens. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. If this is your first time with us, a very warm welcome, and I'm obviously Anna, and I do this session with my husband David. I do promise you, I do allow him to speak and participate. So you will be hearing from him as well. I had a whole thing kind of prepared about what we were going to look at in terms of the price cycle and how and the use of multiple time frames and how the price cycle repeats, if you like, in all the time in all time frames. But obviously, in one time frame, you will be in at one part of the price cycle. This is the price cycle here we have here. But obviously when you are looking at maybe a tiny section of maybe this trend up here, this could be, so let's take, say this is a slower time frame, and this is what you're in a trend in a slower time frame. Now within this this move higher, you will obviously you will see the whole cycle repeated on a faster time frame. But the theory is all well and good. The best way to explain it is actually to look at some charts. And as I said, but there's so much going on this morning. It's all a bit, it's rather nice actually. Sometimes this time it can be a bit quiet for all sorts of reasons. So while I get some charts up and running and decide where I'm going to start, let me just pass over to David.
Thanks, darling. Oh, excuse me. And a very warm welcome to you wherever you are in the world. It's early morning here in London, and it's pretty grey and murky. Certainly not as nice as yesterday afternoon when we were on air in the US session. We have a bit of a storm going on, so I hope it's nice where you are. If this is the first time you've come along, a very warm welcome, and welcome to everyone else as well. If you have any questions, please just drop them in the chat box. Happy to answer them there, or if they're longer, then we're more than happy to answer them on air if they're a little bit more complicated. In terms of platforms, Anna's got MT5, which is a fantastic multi-asset platform. It's a step up from MT4, but it opens up all the markets, in addition to Forex, of course, and moreover, the time frames. Anna mentioned multiple time frames. The nice thing with MT5 is that you have this much broader array of time frames to select, which you can see down the left-hand side. MT4 can be a little bit restrictive at times, as far as MT5, excuse the pun, but at MT5 it really does broaden that out and offers you a much broader array and open up the platform to other markets as well. So if you're not familiar with it, I would suggest it is becoming increasingly popular, increasingly available for more and more brokers. There are rumors that MT4 is going to be dropped in the longer term. Whether that's true or not, who knows? All the indicators, all the quantum indicators have been ported over to MT5. And as a quantum customer, you can flip-flop between the two. The choice is yours. You can do it at any time. You do it through the dashboard. You don't have to involve us. You literally move from MT4 to MT5 and back again whenever you want to, and whether you have one indicator or the full package. I've got NinjaTrader running. We flip-flop between the two, so I'm going to pass back to Anna because there's loads going on at the moment, and we will get going.
And the setup that I saw yesterday, in fact, it's not. It was sort of late afternoon, and it was on the CSI. And if you're not familiar with a currency strength indicator, this is the one that we have. This is our own and available through our quantum trading set of tools. It's basically, what I saw is when you have an overextension of an individual currency, and by an overextension I mean something that is very overbought, which is up here, or and oversold down here, which basically what the indicator is telling you is that is on this particular time frame, the price move in a particular currency has reached a point of extreme and is possibly looking to roll over. And where multiple time frames come into play is that a slower time frame will give you a heads up that something is likely to happen. And what you then have to do is then go down to a faster time frame for a potential point of entry. And really what the faster time frame also tells you is the extent of any move in the reversal that the slower time frame has highlighted. Now, multiple time frames can be very, very confusing because what you're doing all the time is you are comparing. You are if you are trading, say, on a 1, a 2, a 3, a 5 minute, a 10-minute chart, what you are seeing in those faster time frames, you are going to compare what you're going to be looking at, say, with the 30-minute chart or even the hourly chart. If you're on the 30-minute and hourly, that's where you're going to be looking to take your trade, then obviously you're going to look much at the slower. You're going to look at what's happening in that time frame compared with maybe what's on the 4-hour, the 8-hour, the 6-hour, something that is slower. But even so, in terms of entry, you're always going to have to go down the time frames to the faster time frames because that's where you will see your point of reversals. Now, if you're using the 30 and the 3, the 30 and the 5, and you are looking to take a move as a reversal trader, so we've seen here, there's a nice example here that we have on the Aussie, the pound Aussie. The pound's been selling off quite heavily. In fact, the Aussie is also being bought quite heavily. But if you compare what the pound is doing against the Aussie and compare with what it's doing in cable, it's actually doing two very separate things. But that's another issue that we want to cover in this webinar, how one currency can be bought very strongly against in one pair but sold very strongly in another, because it depends what's driving, what are the driving forces in that pair. So what I'm trying to say is at the moment the pound Aussie is obviously in a very strong downtrend, certainly on the 30-minute. If I move that to the 30-minute chart here we are. This is the 30-minute chart. But if we look at our CSI on the 30-minute, what I'm trying to say here is the pound is still selling and the Aussie is still climbing. The Aussie is the blue line. But if we go down to the faster time frame, what we're actually seeing on the faster time frames is we are seeing this reversal. And the decision is, as always, once you have decided on your time frames, is there enough in the move, in this reversal move that we are seeing, at this pullback, this correction that we're seeing, for you to be able to take a trade? And this is always the dilemma as a trader. Is there sufficient, is there enough in taking account of spreads and what have you to be able to say, do you know what, I know in the slower time frames, as we've seen here on the 30-minute, is still going down, but in the faster time frames, do I have an opportunity to take a position to the short, to the long side? It doesn't mean it's going to be a full-blown reversal, because as I said, if you look at the hour, you compare that with an even slower time frame, maybe this is just a correction, but that correction and pullback may be sufficient for you. And this is where the CSI will help you, because it will help to pinpoint the point at which on the faster time frames it is likely to, these two currencies are likely to turn around, and also the extent, how far that is going to go. Now I've got here, and this is where we have to use, if you're going to take that approach, you're going to have to use something like a non-time based chart. This is the renko that we have here on the MT5. David's got tick and renko on Ninja, and you'll be able to see how that plays out on the NinjaTrader platform. And really, or is this simply a minor correction, and the initial primary trend will continue lower? So what we're talking about, talking primary and secondary trends. Secondary trends are perfectly tradable. Sometimes secondary trends, they're not just secondary trends, they actually kick into primary, it becomes, you do get a full-blown reversal, so you get a primary trend, if you like, high. It doesn't often happen, but it can do. But your starting point is, I think, to make life easier for yourself, is having a currency strength indicator. If it's not ours, it could be somebody else's, but at least you'll be able to see this play out in real time by going up and down the time frames. But what it also does, it helps you to understand a little bit more what we mean by multiple time frames, because charts are very seductive. There's always something going on. Your brain is looking at chart patterns. Your brain is looking at support and resistance. Your brain is looking at maybe the indicators that you use. You're looking for points of entry. But sometimes by having just the price movements expressed on an indicator such as the CSI, it really does begin to make sense. And as I said, you can just put you can gauge it yourself if you put your pointer and look at the time and then go up and say, okay, when did this reversal? This is 0921. It's actually 721 because this is always 2 hours out, as it were. So you look at that. That's the M3. If you go up to the 30. And you see here, where are we? 721, 721. Where are we? 9. There we are. I can't find it at the moment. But what you do is, it will help to pinpoint at those points where the price is pulling back, correcting, or maybe it is going to be a major reversal. In fact, if we look at the 30-minute chart, it's great. With the pound, you see it rolling over here. In this move lower for the pound here, from here to here, there may have been a trade, sorry, this is the reversal trade lower. There may have been sufficient in that move for you to take that on a faster time frame. And you just have to go down to the faster time frames and pinpoint at that point where it is actually going, it is going to reverse lower and against what. So that's what I wanted to highlight, but I'm not going to go on about it anymore because, as I said, there's a lot going on in a lot of the pairs. It's quite unusual, and I'm just going to pass over to David because he's been looking at some pairs for you. But I think, are you looking at the Aussie at the moment? Because the Aussie is certainly on a bit of a storm at the moment, but for the British pound at the moment, it's quite unusual. Being bought against the dollar, because I think it is dollar selling which is driving that pair, but it's certainly being sold off very heavily against the pound Aussie. I'm going to keep an eye on this. As I said, we saw this little pullback. Let's go back to the 3 minute. There we are, and we can see here. There we are. This is what we saw, this move higher, the move lower in the Aussie, but it doesn't look as though that is going to deliver sufficient, to take a rate. It is just a minor pullback. But the reason for looking at something like the CSI is just to highlight that. But it also helps to keep you in, because then when you go and look at the charts, you say, okay, I can see what's happening in the faster time frames, but you know what? It's okay. I'm going to hold. It's the primary trend is going to carry on. The issue then becomes is, where do you join that trend, or do you wait for a reversal? But that's a question for another day.
Just switching over to Ninja. There we go. Should be coming up any minute now. Can you hear me okay? Yep. Fantastic. I've got the Aussie yen running on these charts, and just to if you come along to the US session, you'll be familiar with this particular layout. I've also got another layout which I'm going to jump across to in a moment. But on this particular screen, I've got 4 different charts up. On the top left, this is on the Aussie yen, because we've seen a lot of Aussie buying, and we've seen that reflected in the pound Aussie. But it's also reflected across many other of the pairs as well. And I'll pull up the currency array, which really just highlights the issue of separating out whether sentiment for that particular currency that you're considering is universal across the complex, or whether you are trading that particular currency pair in isolation to the broad market sentiment. And there's nothing wrong with doing that, but it's just the fact that you need to be aware of what you're doing in the pair you're trading and whether the flow in that particular currency is universal across the complex. I'll pull up the currency array in a moment. In terms of what we're looking at here, I've got 4 charts. Top left, we've got, as I say, these are all linked with the Aussie yen. So one of the really nice features of NinjaTrader, this little lime green square here, means that all these are instrument linked. So when you change from pair to pair, they all instantly change together. Top left, I've got the tick speed. This is on 3 minute, but I've also got the tick speedometer running as well. So that gives us the tick setting to set for our tick chart. So I've got a tick speed here, tick chart for the Aussie yen here, which is currently running at 5.19. I need to up that a little bit. And I've got the renko here. And the renko is running at 30. And what that means is on NinjaTrader, that means we're running at a 3 pip brick size. And it's done automatically for you. It works in a very similar way to the MT4, MT5, where the indicator actually delivers the optimal setting for that particular pair in the time frame that you're trading, because this changes constantly throughout the day. As markets speed up and slow down, then the actual brick size is recalculated accordingly, and you can work off any time frame. You can see here we've had this nice run on the Aussie yen. It's continuing, and the wonderful part of trading with a renko chart is that you can either use it in isolation or you can use it as a blend it together with your time-based charts, either as an entry mechanism or to help you stay in, because the renko will smooth out a lot of the oscillations and you get these nice bricks which are very uniform. The other indicators work in exactly the same way. You've got the trend monitor down here. I've got the accumulation distribution, which is all about support and resistance. Down the bottom left, I've got the 5 minute for the Aussie yen. And over here on the left-hand side, I've got the 10 minute. And you can see here that at present we are looking at bullish momentum pretty much across the piece. We've had a little bit of a flicker here as we went through this congestion phase on 5, but we've gone back into upwards momentum as for the time being. But just hop over onto this workspace. This is exactly the same, except the chart at the bottom left is replaced with the dollar. I beg your pardon, with the yen. And that is largely the reason that you're seeing this selling of yen universally across the, excuse me a moment. You're seeing universal selling of the yen across the complex, and that's the reason why, because on the yen index, that is what you are seeing. You are seeing that sentiment reflected pretty much across all the yen pairs universally. And when you look at different time frames and also different charts in terms of non-time-based charts, they all help to give you that all-important perspective in terms of decision-making, whether to stay in, whether to get out, what are you going to do. And the nice thing with the renko, it does tend to smooth out some of the emotion that you get when markets oscillate, move into congestion. You get exactly the same sort of patterns, but they're more structured. Let's just head over to the other workspace I've got set up here, which is this one. This is the currency strength indicator. I've got this set, excuse me a moment. I've got this set on 5 minute, as you can see, same colors. And just move the chat box out of the way a little bit. And what the currency strength indicator does is it disassembles the forex world into those individual components of the market. It is a complex market, and this is always the place to start, because what you're looking at are the individual currencies, the individual building blocks themselves. It's very simple, it's very clear, but it reveals so much information as the starting point for any analysis. Before you even go to a chart, what it does is it tells you whether a currency is rising strongly or falling strongly. It tells you the strength of that move. The steepness of the line will tell you the strength of the momentum in the buying or selling for that particular currency. What it will also reveal is clearly when a currency is potentially getting to an overbought or oversold. We've got the Aussie, the blue line up here, very strongly overbought. The yen down here, the magenta line, is very strongly oversold. So if you're looking at this as a reversal trade opportunity, you as a trader, your tactical approach to the market is you want to trade reversals because you want to get into a trend early, then that is what you will be considering as one particular option. The other thing also the currency strength indicator reveals instantly is, first of all, when a currency is congestion, in other words, it's moving sideways. But in addition to that, when you see the two lines rising or falling together. So, for example, here we had the euro, which is the orange line, and we've got the Canadian dollar here, which is the purple line. When those two lines are rising together like that, then what that tells you is that for that particular pair, that particular point, there is very little momentum in the trend. There may be a minor trend, but it's certainly not a strong trend. Why? Because both currencies are being bought. Now, they may be being bought at slightly different speeds or with slightly different strength, but nevertheless, there's no diverging forces to drive the two legs of the currency in a strong trend. In other words, one's not rising strongly and the other's not falling strongly, which is what you're looking for the whole time, because that is where you will see the strongest trend of all. I've got the Aussie yen here on 5, which we've already looked at, and this is we've got the volume point of control indicator running here, which again is available, of course, on MT4, MT5. The volume point of control itself is sitting here at 80.55. That was the point at which price was in agreement. The market has stayed there for the longest time because this is the heaviest concentration of volume you can see here on the histogram. And we're now developing into the bullish trend as we move away from that, supported with volume, and we're now moving into a congestion phase. What the volume point of control also highlights is these low volume regions and also clearly these high volume regions. This is always the highest volume where you've got the volume point of control, and then you have these other areas of congested volume up and down the chart. And again, it's another reason for using multiple time frames, because what you're doing all the time is you're constantly looking for those signals in different time frames up and down the charts to help you in your decision making. It's not about looking at one chart, it's using multiple time frames. And on this occasion where we were at the 5 minute, as we come up to these low volume areas which act in the same way as support and resistance, but through the prism of volume, price and time, when you get to these areas, you're expecting the price action to move through pretty quickly because there's very little in the way of volume to act as resistance to any move higher. Equally, if you start to approach a higher volume, as we're doing here, then that is where you expect the market to congest. It's all about anticipation. Just head over onto the currency array, which I mentioned earlier on. I've got this isolated out on, let's just put that back on. That's all 28 pairs ranked. And what the currency array does is not only does it give you an instant view of the 28 pairs and the strength of the trend, but it also tells you about market sentiment also. You can see here over on the right-hand side, the strongest trending pair right now is the Aussie yen. It's right up at the top here. The angle of incline is very steep. It's rising very strongly. Equally down at the bottom here, what have we got? We've got pound Aussie. And what we want to know there, and then obviously we've got the array of all the others linked in here, but we can also isolate that out. So if we isolate out on the pound first, what we're seeing in terms of pound Aussie, we're seeing continued selling because it's down at the bottom of the ranking ladder, bright red. It's still selling very heavily. But what's interesting about the pound is that if we move up the ranking ladder, you can see here against the pound yen that the pound is actually being bought. So there's buying of pound here and there's selling of pound here. And what you're then trying to figure out, if you're looking at one of those pairs as a potential trading opportunity, is you're trying to figure out what is the actual driver now? Is it the yen? Is it the Aussie? So you go back to isolating back out. We've now isolated out on the yen, and what you can see very clearly here is that the real driver, what's really driving, certainly as far as the pound yen, it's the selling of the yen, because all these pairs are now well above the midpoint line, which is the horizontal line here. And the nice thing with the yen pairs is because the yen is always the counter currency, it's always instantly clear whether you've got yen selling or you've got yen buying across the complex. And we have pretty much a perfect picture here. So from that very simple analysis, from this fantastic indicator, which gives you all this information about the strength of trend, but also the sentiment across the complex, instantly you can see what is going on in terms of the yen and all the yen pairs, which ones are moving most strongly, and more importantly, is sentiment for the yen universal, which clearly it is right now on the 5-minute time horizon. And in exactly the same way as you would do with a chart, you would also go up and down the time frames on this to look at all the other changes that are going on. You know, what's going on 15, what's going on 30, and all of that is then encapsulated in your chosen time horizon that you are trading as a trader. Are you trading on a 1-minute, 5-minute, 15 combination, or a 1, 5, 10, or are you looking at this on a 15, 30 hour? Are you looking at it as a reversal, or are you looking to jump into this as taking some pips out of an existing trend? That's what you have to decide as a trader. There's no right or wrong answer. It's just how the tactical approach that you are going to take to market for each particular opportunity that comes along. So if we just flick that, excuse me, if we just flick that back on again, and maybe go and look at the, let's have a look at the Aussie, which I think was the one, there we go. There's the Aussie yen at the top, and we've got the pound Aussie at the bottom. Just go back to the CSI again. So on 5, let's change this up to, let's go up to 10. Just have a quick look at that one. Very similar sort of picture. You've still got the Aussie very strongly overbought, the yen down here very strongly oversold. And this is just a facet of price behavior, in that do not imagine that the currency itself is just going to roll over. As soon as it gets to the top, it's going to roll over and start a nice trend in the opposite direction. It does, but patience is everything in this business. And in taking a reversal trade, you have to accept the fact that currencies can stay overbought and oversold for much longer than you may think. But ultimately, because this business is about the reversion to mean, it's a market which is constantly reversing from overbought to oversold and back again. You just have to pick the time frames, and you just have to be patient. And if you're a reversal trader, it's about being patient, setting your stop losses a little bit wider, and then just waiting for the reversals to occur, because they do eventually, because no currency can stay overbought or oversold forever. And that applies whether you're on a 1-minute chart or a daily chart. It makes no difference. They work in exactly the same way. And price action is all self-similar. It's all wheels within wheels. We've used the analogy many times. It's like Russian dolls. It's a whole series of cogs which are all spinning in different directions. And what you have to accept as a trader is that in the faster time frame that you may be trading in a short position, on a slower time frame, it's a longer position, because it's just, you are just trading as Anna said at the start, you are just trading a minor reversal, a temporary pullback. It's what we call the primaries and the secondaries. You're trading a secondary within a primary trend which is in the opposite direction. Nothing wrong with that. You just have to understand the difference between primary and secondary trends. And that is all made very clear when you have an understanding of volume price analysis, which is a huge aid to helping you understand whether the market is primary or in a secondary state. Let's just go back to the previous workspace. That one, there we go, and see what's going on. And it's no surprise to see on the Aussie yen that we're now in a congestion phase. We're in a congestion phase for lots of different reasons. For example, if we look over here on the tick speed, this is the blend of, this is volume and price. This is traditional volume and price, but it also encapsulates the tick speedometer, which delivers the tick speed for the tick chart over here. I'll just change that to, let's just change that to 610. There we go. So we're running at the right speed on the tick chart. We are in congestion. Why are we in congestion? partly because the currency strength indicator tells us we're in congestion. We're at an extreme on the CSI in these faster time frames. Over on this tick chart, for example, we've got two pivots here. We're in congestion. We're building levels. We're building layers. The same is true here on the renko. We've got a pivot gone in. We've got a change in our trend dot color here. We've gone to gray. We've been blue throughout. Now we've gone to gray. No change on the trend monitor right now. No problem at all. Down here on the yen index itself, again, we're coming to a pause point. You know, we've got a hammer here. We've got no volume on this chart, but we've got a hammer. We've got another little hammer candle here. You know, we're in a congestion phase. That's what it's telling us. If we look up here in terms of the volume, we've got this big spike in volume. We had high volume here also, all these green areas where we got a lot of activity. So we were rising nicely up here, and then we get these two candles here, lots of volume below. What's that telling us? Well, it's weakness. Does it mean the market's going to reverse? Not necessarily, but what it's signaling to us is the potential weakness ahead, because we've got a ton of volume coming into the market and the price action hasn't delivered. In other words, it's an anomaly. It doesn't mean that the market is just going to go like this and collapse. All it means is, for the time being, we are anticipating weakness. We are anticipating some congestion. That's what it implies. Let's just go to, so you see what's going on in terms of the dollar. Dollar's having a bit of a recovery. We had this pretty strong sell-off on the dollar, certainly into European Open. Now we're starting to see a recovery in the dollar. So if you're looking at the majors, they will be starting to reverse, certainly based partially on this strength that is now coming back into the US dollar. Can I pass back to you, darling, for a moment?
Yeah, I just want to show something on the pound.
Okay. Just going to pass back to Anna on the MT5. Apologies, we were just changing screens. I'm just looking at the questions. Just to answer your question, Tony, on if strongly sloping CSI, what breakout traders should be considering? What should trend traders consider? Exactly the same thing. If you're looking at trend trading opportunities, then you're looking for development of a strongly trending line, either higher or lower, and that's what you're looking for. So if you're trading it as a trend, then you're jumping on a train that's already moving, and you want to see those lines rising strongly or falling strongly, and that will deliver a strong trend. In terms of breakout traders, that breakout may well be away from a congestion phase, and again, what you might see there is you might see the lines pretty flat, and then you'll start to see them sloping upwards or downwards. And again, you jump on the trade as it develops away from the breakout region. The difference is that on the breakout away, you'll be looking at all the other aspects of volume price analysis and support and resistance and so on and so forth.
Just a couple of things I want to highlight on, just keeping an eye on the pound Aussie, and we were talking about earlier whether there was enough in this little sort of reversal move here that we saw on the faster time frames. This is on the renko, and we can see this little move here higher that we saw on the 3-minute chart, where whether there was going to be enough in this move higher to take a position to the long side. And here David was talking about anomalies in the sense that this is what VPA does for you, what volume price analysis will do for you. Not only will it highlight when you see these big moves in the price cycles at points of accumulation and points of distribution, but it also will confirm whether the primary trend is actually coming to an end, and you are seeing a true reversal, or whether that secondary trend is simply that. And the anomaly we see here in these little up candles is, if you look at the volume that's gone into these little candles to try and force the price higher, what it actually tells us is that amount of volume, you should have seen some huge candles and a genuine move higher. You also have to use this in conjunction with support and resistance. The other elements of volume price analysis, volume price analysis is the relationship between volume and price to tell us whether a move that we're seeing on the chart is genuine or not, or it is, as we say, an anomaly. But you also have to see it in the context of, well, you know, what is it doing? Is it hitting a major resistance point? Is it coming to a major support level? And that will also help determine whether that is going to be genuine, or it is going to actually offer you a potential point of entry. In fact, you say, okay, the market has tried to move higher, the buyers have tried to force that price higher, it's hit this. We have a Camarilla to tell us which of our support levels, support and resistance levels are the most important. And we say, do you know what? If it doesn't go through that, that could be a signal that this isn't going to go very far, and in fact the primary trend is going to continue. And the primary trend here, as we see here on the 3-minute and also on the 30-minute chart, is relentlessly lower. So as a point of saying, well, you know, is this if I'm in this trade, am I going to come out? The answer is no, because what I've seen in terms of price and volume and support and resistance, and if I'm not in this trade, well, maybe this was an opportunity to join the primary trend. Now we have another issue coming up at this particular time, not just with this particular pair, but with the pound and with trading generally, and that is we're coming to the London Open. We've got 6 or 7 minutes to go, so that will also be another factor in your decision making. If this was in, you know, just in the middle of a session, you would say, yeah, okay, I like that. You know, I'm going to use that as an opportunity to enter this move lower. You know, everything is still relentlessly red, but being aware, being conscious of the fact that London is about to open, all sorts of things happen at these crossover periods, especially when you know, when a new financial centre comes on board. You might sort of say, do you know what? Because I've only got 5 minutes to go, I really think I ought to wait. You know, just wait and see what happens when London comes in. The sentiment may continue, or you know, you'll get a lot of volatility. You get a lot of volatility. It's just not, what I'm trying to say, it's just not worth it. Although the setup that you see on the chart is perfectly valid, because it has happened just before the open of a major centre, you may want to hold back a little bit and wait to see what happens. But what you do have is, you do have these levels. You have the S4, which, you know, a breakthrough, with clean break with lots of volume coming in. Certainly if you use Camarilla, you will know that that is you know, that is taken to be a genuine breakaway move on the S4 to the downside. Now, a little tip, I think the person who suggested this is not in the room today. He's one of our traders here in the UK. There's a lovely guy, and he's used these indicators for some time now. David, I'm sure he won't mind me mentioning his name. I know he's not here at the moment. What he does with the CSI, because MT5 and MT4, as I said before, the timestamp is not to your local time. The platform will either be set to MetaQuote's time, or is it MetaQuote's, or what else? Or the broker time. Yes, mine is always 2 hours out. So at the moment it's saying, let's have a look, what's it saying on this candle? Although the MT5 doesn't always come up, it's basically it's saying 9. If you see here, it's 9:39. It's saying it's nearly 10 o'clock, when in fact it's not. It's nearly 8 o'clock. What David does is, to help him as a reminder for when for the session crossovers, he actually drops a vertical line down on the chart itself. There's a vertical line. Where's the drawing line? Here it is. Here. So you drop that down there, and that's it. You literally just put a line there like that. You can That's it. And you can properties, and you can make it very, very thick. The thicker the better. There we are. And that tells you or gives you the heads up that, hey, you are coming up to a session crossover, the start of a new session. It's very, very easy, trust me, to to forget, because we get so wrapped up in looking at the charts and looking for trading opportunities, and you think, oh, shoot, I've got three minutes to go. Maybe I should just hold off and see what what is going to happen. Now, with regard to the Camarilla, you may have noticed the levels that are shown on the faster time frames are not the same as the levels on the hourly chart upwards, and certainly up to the daily. And that is because we have developed these indicators to give us not all the levels created for the charts from an hour below on the faster time frame are based on the open, low and close of yesterday, and they will only stay on the chart for 1 day, and then they will refresh. The levels on the hourly charts up to and including the daily, they will stay there for the whole of the week. So what it'll help you is with this idea of confluence. So for example, we see this is the 2-hour chart we can see now, and we can see this is this huge down move that we've had in the pound Aussie. But what it will tell you is this is now reaching 82.17 just before the London Open. What is likely to happen because we're coming to the London Open? Well, the chances are this is where it is a natural pause point, which is it's just a significant level for this particular pair, and it's also running into this sort of congestion here back over to the left of the chart. So our expectation is we know it is likely to pause, and more so because, as I said, we are coming up to the London Open. Is there anything you want to say to add to that, David?
Just switching back over to Ninja for a moment. Should be coming up. Yep, you're there. And I've actually pulled up the pound yen because, as Anna said, at crossover time, it's always interesting to focus in on, certainly on the European currencies of euro and pound, because they are the ones in focus. And it's often the case when you go through the crossover sessions that you will see reversals. I just wanted to highlight this because there's a couple of really nice examples of, first, using multiple timeframes, and second, what volume price analysis is telling you. But just pull the 5-minute up full size. We had the volatility coming in. We had 2 volatility candles. The second one is now reversing back inside the spread. When the volatility rises, it doesn't always mean it's going to be a reversal, but it's always a signal that there is potential involvement of market maker participation, and therefore the opportunities for trap, particularly as you're heading into London session crossovers from the Far East. It's a classic opportunity. And as you can see here, what have we got? The third candle comes in, big volume, big wick to the upside, pivot sits on the top of it. We're coming off the highs. We've got, 20, 25 pips in here, something like that. You can see the trend line here is starting to dive. And if we sit on this one for a few minutes, then, the trend monitor is going to transition through into a darker color, almost certainly. If we just pop up the 10-minute, what does the 10-minute tell us? It just gives us a different perspective on what is going on. We have the single volatility candle here, so it's giving us a heads up. We've got volatility in the market. We've got to be careful. Then we get this big shooting star candle. Pivot sits on top of it after this candle's closed off. Ton of volume coming in under it. At the very least, that is going to weaken. Not necessarily a full-blown reversal, but if you're trading that to the long side, that is just such a clear signal to take either to close out to take some money off the table if you're trading with multiple lots, or close out the full position, get out the market, sit on the money, and wait until the market delivers, which is what it's doing right now. Sorry, Ling. Yeah, I just transferred back to Anna, but it's just such a powerful example of multiple time frames, and B, the power of volume price analysis. Now, as you can see here, literally real time, we've got volatility coming in here, big volatility candle building. One of the beauties of the volatility indicator is it delivers in real time. So as soon as the condition is met that average true range has been exceeded on the indicator, bang, it comes in. You don't have to wait. Now you know you've got volatility in the market. You know you're going to get loads of volume under here. The market makers are in full flow. They are racking this market about. They're going to frighten the life out of you. And that's what this business is all about. It's the anticipation of what is going to happen next. Just going to pass back to Anna.
And right on cue, when I said you would possibly want to wait before rejoining this trend lower because of the crossover session, you know, everything was set up beautifully for the trend to continue. And what do we see here? You know, it's as if it just stops and it just turns 180 degrees, and this is what you will see all the time, not just at the London Open, but you'll see it at the New York Open. Probably not quite so dramatically at New York. What do you think, David? Not because it's a much looser time, if you like, for starting, but London is very, very, you know, 8 o'clock our time here in the UK. And you'll also see it at the London fix. As I said, you know, someone talking at the charts that we were looking at the indicators, you think, oh, great, you know, beautiful trend lower. VPA at the time, a perfectly valid analysis. We're looking at the, as I said, at the S4. The S4 has come into play here, as we can see here, this level here. It hasn't managed to, it's just sort of peaked over it as well. You've also got a volatility candle triggered. So, you know, we know the price is going to revert back inside that candle. But this is what they do. It's a perfect time to trap traders into not so much but weak positions, yes, but you know, you would have seen that move lower, and if you're not aware of what goes on at these at the start of a new session, you know, you quite happily go ahead and, you know, put your trade in, and you've got every expectation that it is going to carry on lower. All your analysis tells you that, your indicators will tell you that, not just the ones we use, but you know, even standard indicators will do, or maybe proprietary ones that other proprietary ones that you may be using, and then bang, that's what they do. And as I said, and if you are thinking of trading and taking a trade, and you see this, you see a really nice sort of setup, you see a chart that, you know, meets all your the criteria that you like to use for when you take a trading decision, and it is just 5 or 6 minutes, 10 minutes before certainly the London Open or the London fix, all I would say is just, you know, just take a step back and wait. It won't cost you anything. In fact, it will, you know, it will probably save you some money, because, you know, like everything else, once all this hoo-ha is over, the primary trend may certainly well continue, because certainly on the if you go right up to the slower time frames here, let's just expand that up here. Let's have a look. Let's have a look, go up to 6-hour chart maybe. Let's see what the 6-hour chart is. If we look at the 6-hour chart here, you can see here, if you look at the previous candle, you've got a really nice sort of weaknesses there. You've got a deep wick to the top of the candle. So it's not surprising to see the price move lower. And what we're seeing at the moment, as I said, it was going to bounce off the S2, which it has done. And what we're seeing is this minor, this pullback, this correction. That is the wick to the bottom of that candle that we're actually seeing being played out in the faster timeframes. So anything you want to add to that, David? Yeah, that's it. Right, we are going to stop there because we have other videos to do and content to get out, and also we have to catch up with our own trading. But I just want to thank you all for taking the time to join us today. I just want to check there's any more questions. Let's have a look. No, that's fine. If you have any questions, then please just you're more than welcome to drop me a line at anna@annacooling.com, or you can drop David a line at david@quantumtrading.com. If it's the first time you've come along and you've not seen these indicators before, they are from quantumtrading.com. We originally developed them for our own trading, and they've just sort of, they've grown and grown and grown. You can just buy one indicator. We have discounted bundles, or you can buy the complete package. You do get it as a lifetime, for a lifetime license. All upgrades are free, and we do also offer a 7-day money-back guarantee. 24/7 support, 365 days of the year, and you can transfer from platform to platform. We don't charge for that, and you also get all future indicators that we are in development and we are developing. They are added to the package. So if you buy the complete package, whatever you pay, 894 for MT5 or 1197 for NinjaTrader, you never pay us any more money. So when we develop new indicators, for example, the renko optimizer for Ninja, if you're a Ninja customer, that's automatically added to your package. But you can buy the indicators on an EPP, an easy payment plan. That's individually or the package. This is where we are at the moment. This is from our education program. We do have a forex education program where we do based on volume price analysis. It's got fundamental module, relational module, all sorts of things, everything you really need to know to succeed in this business. The cost of the education is 1391 for MT4 and 5 and 1694 for NinjaTrader 7 or 8, but that does include the indicators. So the education element is actually quite a modest price, but it does include all the indicators. There's about 50 hours of video and video podcasts. There's PDF and PDF downloads, and we add to the program all the time. And as I said, this is the site, quantumtradingeducation.com. But as I said, you can either drop me a line, anna@annacooling.com. That should actually say david@quantumtrading.com, not, but you can email helpdesk@quantumtrading.com. And if you are a quantum trading customer and you have any questions, you're always more than welcome to get in touch. I think anything else you want to say to that, David? That's it. Brilliant. All it remains for me to say is to thank you again for coming along. I hope you've enjoyed it. I hope you've learned something that perhaps you didn't know before. We are back next Monday in the afternoon at 3:30 London time, where we really focus on more the American markets. Next week we're actually looking at currency futures. So if that's something that perhaps you've never considered and you'd like to come along, you're more than welcome to join us. Otherwise, we are back at this time next week. So enjoy the rest of the trading day. Looks like it's lots of things are going to be going on, certainly with Donald and trade tariffs and risk on, risk off. It's always a great time to be a trader, but it's probably one of those few times in the market where there's also, there's so many opportunities. Sometimes, it's spoiled for choice at the moment. But whatever you trade, whatever you do, stay safe, and we'll catch you next time. Take care.